Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. It's the last trading day of the week, and it's a mixed bag on Wall Street. Stocks dropped as investors remain cautious ahead of U.S.-China trade talks. We're looking at all the market moves and what it means for your investments. The future is here when it comes to America's open roads. Self-driving big rig trucks are rolling out, and we're going inside the C-suite at Aurora, talking live with the CEO about the future of autonomous semi-trucks carrying freight on public roads. And is Grindr breaking investor hearts or winning them over? We're talking to the online dating app CEO about the health of the company and what to expect next. Well, driverless trucks are officially on the road. Aurora Innovation making autonomous freight a reality as it operates a commercial self-driving service with heavy-duty trucks on public roads. Company recently reporting first quarter results, highlighting the available liquidity to fund operations into the fourth quarter of 26. Here with more is Aurora CEO Chris Urmson and Yahoo Finance's Julie Hyman. Chris, it is good to see you. So let's start there with those results you just reported, Chris. Walk us through the report. What are you seeing in the business?
Yeah, well, the big news for us is that we've been talking for years about getting self-driving trucks on the road, actually doing that for real, and that we've accomplished that. A couple of weeks ago, we started operating, and now every day we have trucks on the road pulling goods for customers with nobody sat behind the steering wheel. Over the rest of the year, we're really going to be focused on how do we take this from an initial launch lane here between Dallas and Houston and on the road from Fort Worth to Phoenix. Moving it so that it operates day and night and in weather. So really exciting times for us.
Well, and talk to us about how it's going. And something else I'm curious about, Chris, when we talk about self-driving vehicles that are cars, right? But they're supposed to be passenger or sort of taxi-like vehicles. There has been a discussion going on about how many humans are sort of involved in their operation, right? Do you have remote control of the vehicles in some cases? Talk me through, does that happen with the trucks as well?
Well, it's going about as well as we could hope at this point. So I took a ride the first day we went from Dallas to Houston. I was sat in the back as luggage. There was no joystick or control. I was really just along for the ride. And along the way, we encountered a Mazda that was weaving around in front of us. We got to Houston, and the traffic was as dense as it always is in Houston. And it just worked to the point that by the time we were taking the trip back, despite this being a first of its kind adventure, I was watching YouTube in the back seat. So really exciting to see the progress and really excited to see this on the road. No, our trucks are really reliant on their own ability to drive safely. We talk about the fact that there's nearly ubiquitous cell phone coverage in the US, but when you're talking about a truck safely driving down the road, you don't want to count on the nearly. You really need to have the thing be able to drive safely by itself.
In terms, Chris, of sort of, your tech's impact on jobs, I would assume, Chris, if you're driving a truck now, you're fine. But I'm just curious, if you were talking to a young American right now and giving them advice, would you still encourage them to pursue a career as a truck driver?
I'd certainly encourage them to pursue a career in logistics, and I think that's going to be a continually growing space for us. My expectation is, and the industry expects, that over the next decade, we need 1 million new people to be willing to drive trucks. And it's an incredibly important job, and I am thankful for everyone who's willing to do it. But there aren't enough Americans who want to do it. And with the country's current trend in immigration policy, we don't expect there's going to be enough people that are willing to get behind the wheel, spend time away from family, deal with the fact that they're 10 times as likely to die on the job as the average American. And so we see what we're building at Aurora really to complement the men and women who serve this country by driving freight.
Chris, you do have competitors. By Bloomberg's math, at least 5. What makes Aurora different?
Well, I think the biggest thing that makes us different is we actually have a product on the road. Right, and that's the culmination of the work of an incredible team that we have here. We have some really interesting proprietary technology in both our verifiable AI, which is a way of using some of the most modern machine learning and AI techniques you've talked about around ChatGPT and Google and whatnot, but doing that in a way that you can actually trust it to drive safely on the road. We have special technology in the LiDAR, which is a sensor we use to look ahead down the road, we can see 5 football fields down the road. That's something no one else is able to do. And when you're driving a big truck, it's important to see that far out. And then we have incredible partnerships. So today we work with Volvo and Peterbilt trucks. Volvo and PACCAR, the parent company that makes Peterbilt, make half the trucks sold in the US market. So that's a really great set of partnerships. We work with Continental, who's one of the world's leading tier 1 manufacturers. They can help us produce the hardware at scale so we can really have a huge impact in the market. And then finally, an incredible set of customers with folks like Werner, Schneider, Hirschbach, Uber Freight. These are all folks who are kind of the pinnacle in the freight industry, and we have the privilege of working with them today.
So Chris, the thing you said at the beginning of all of that you guys are the first ones out the door, how important do you think that will be down the line when there are a lot of other autonomous trucks on the road? Do you think that, in other words, how big does a head start does that give you, that first mover advantage?
Yeah, we're talking about freight in the U.S. is a $1 trillion market, so it's a gigantic space. So today we really see it as a green field, and we want to get out there and start serving customers and creating value. But we think it's a big deal. We think we have a multi-year lead on this gigantic market compared to anyone. And with the tools, processes, and technology we've built in-house, we think we're only going to accelerate and further build that lead. So I'm incredibly bullish about where we are. It's an incredibly exciting time at the company.
Chris, always great to see you. Thank you so much for your time. Appreciate it.
Thanks very much.
Well, Porsche's first ever electrified 911 is here, and pulling into the studio to tell us more about it is Yahoo Finance senior autos reporter Praz Sumerain. Praz, walk us through it.
You know, I was driving this car, not a robot, right? It was me, not.
You got to test drive it.
I got to drive it. Yes, I got to drive it. So it's the first electrified hybrid 911. This is a big deal for Porsche. You know, this is their sports car, right? This is a car that made.
You look good in that car, by the way.
Thanks. I appreciate that. Thank you. That's me trying to drive.
That looks right. Yeah.
I'm actually at a test track there in Los Angeles when I was there for a short time. So yeah, basically this car, you know, it's not about efficiency. It's about performance, right? It's not about an EV mode. It's about, can you get more power, more torque off the line. When you're accelerating, there's no gaps in power delivery. It's what it's all about, right? But there are some drawbacks, right? There's no EV only mode, okay? This car's not meant for, you know, that kind of thing. With the Corvette E-Ray with a similar sized battery can actually have a little bit of electric range, believe it or not. So that's a little bit of drawback, but it's still an all-around winning car. Pricing is not cheap, however, $170,000 starting, which is, you know, the going rate for a very top-of-the-line sports car at that technology. But we haven't talked about the big elephant in the room, which is tariffs, right? So Porsche has talked about how, you know, they make all their cars in Europe. They're going to be subject to a 25% foreign tax on autos. They say they were going to probably pass on some of that to buyers. And so the question is, you're bringing this innovative car to the U.S. market. It's going to get potentially slammed by tariffs. What happens? Do sales go away? Do people say, you know what, I'll pay the tariff to get this, the first ever electrified 911? We'll see.
And when you were driving it, walk me through the experience. How did it feel?
You know, it's interesting because it has no electric starter. It goes right from the there's a battery, a motor in the actual transmission, and a motor that spools a turbo for immediate power. So you just push a button and it immediately fires up. Like it's a very kind of a little shock. Like it's not like a it's like a boom, you know? It's very cool, but just driving it super smooth. The car is so wide and planted. You know, I'm a lucky guy. I'm a lucky guy here. It's obviously beautiful design, very purposeful interior, comfortable, but very much focused on the driver. Looks great, looks smart. You know, every 911, a person on the street can look at that. What car is that? It's a 911, right? So styling, great, but performance is very different than other 911s.
How so? How so? Walk me through that part.
It almost has the smoothness and power delivery of almost of an EV.
Yeah.
But you hear that motor in the back, right? You hear that car, that flat six kind of rumbling behind you. Immense power, kind of scary power. I was in the test track, we did a straightaway launch, and the guy's like, just punch it.
Yeah.
I punched it, I got scared. Rear wheel starts spinning, the car flies. I mean, man, this is insane. So it is a fantastic car. It is a technological marvel, but I got to tell you, in the world of post-tariffs, the future of this car is perhaps uncertain in this country.
Well, can I just ask you one final question? Who is Porsche kind of taking on with that vehicle? Who's the competition?
I mean, it's kind of, I mentioned the Corvette E-Ray. It's the only other sports car rear motor with an electric motor in it that kind of assists with some of the stuff. And that's probably its only like near kind of comp, right? But there's no real car out there in terms of, there was Acura NSX that was a hybrid that's gone now. There's a couple other cars like the Bentley GT, which is way more money. That's also got a hybrid power system. So there's some cars here that do. There's no 911. There's no 911 with the hybrid that's really out there, as far as I know.
All right, great story. Thank you, Pras.
Yeah, thank you.
Appreciate it. Stick around. Much more Asking for a Trend still to come. Well, the Dow and the S&P 500 end the week lower as Wall Street braces for U.S.-China talks. And Jared Blickery joins us now with the trading day takeaways. Jared.
Thank you, Josh. Let us take a look at the scores, the weekly scores here. And it was kind of a ho-hum week, and I think investors, having been a little bit shell-shocked from the preceding month, might take this as a little bit of a respite. This is a sector action over the prior 5 days. You can see it is a mixed board. To the upside, we got industrials up a whopping 1.1%. After that, you got utilities up barely 0.5%, energy, consumer discretionary, tech 2%, and then financials getting closer to that break-even point. Healthcare taking the lead to the downside. That was down 4%. And then if I look at the NASDAQ 100 here, you can see kind of a mix of red and green, maybe a little bit more green. Apple taking a hit, Alphabet 7% hit, Tesla up 4%. And then the leaders here, we're seeing solar of all things. Solar led the week up 8%. Bitcoin, well, we're not going to get into Bitcoin today, but a big breakout above 100,000 to the downside. I mentioned healthcare was a leader to the downside. That's because of biotech. So we got a couple of biotech ETFs down about 8%. But I just want to leave us on the futures market because crude oil really caught my eye. Just going to linger here for a second on the year to date. Doesn't look like much, but this was fairly significant. We had so a little bit of volatility off of the bottoms here. And by the way, this low here in the low 50s, low to mid 50s is a 4-year low. So that's something that we want to keep watch out going forward just because crude oil kind of paints a demand picture for the entire world.
And what about that big 9-day streak in stocks, which came to an end, Jared? Walk us through that.
It did, and it was very impressive, and you could easily ascribe some of the tariff relief to it, but I think there were some other things going on. One of those things was the buyback bid, and this chart comes from Goldman Sachs, and let me just back this up. I'm going to do a whole segment on buybacks on Monday, but basically corporations, when they're announcing earnings, they are not allowed to do their buybacks about 5 weeks beforehand. They can do a little bit, but they have a little wiggle room, but for the most part, we have a buyback blackout period around earnings. And then it just kind of disappears. So this number going up means the company's exiting that window. And right now we are somewhere in here. So not surprisingly, I think we caught a bid thanks in part to companies and especially those bigger companies just buying back their own stocks.
Now, when we talk about the risk market comeback,
yes,
I know you've been thinking about the role of human emotion in all this. Yeah.
Tell me about it.
Yeah.
And I got to speak with, this gets to fear and greed. So I got to talk to James Demmert, Main Street Research over at Stocks and Translation, and we kind of got into this whole market psychology thing. Here's what he has to say.
40 years of doing this, I've seen and heard investors' horrible mistakes, almost always related to their own psychology. Right? Our human brains are just not great at investing. We can be our own worst enemy because of fear and greed. And I think the recent months in the market are a really good microcosm. People were too optimistic at the beginning of the year, investing too aggressively, and now you find people don't even want to go near the stock market and they think it's uninvestable. So I've learned a lot of things over the years.
And really interesting to me is that the CNN Fear and Greed Index, that ticked up into greed mode this week, all the way up to 62. Guess what it was at the bottom in April? It was like 3 or 4. So greed is coming back, and I think we can leave it there.
Yeah. Didn't a guy named Gordon Gekko have wise thoughts about this? Or some thoughts? Yes.
He said something like, if you want a friend, get a dog. He also said, greed, for lack of a better word, is good.
Yes.
We'll leave it right there.
We should. Thank you. Thank you, Jared. Appreciate it. Stick around. We're talking to the CEO of Grindr and much more, asking for a trend. That's still to come. Grindr reporting first quarter earnings yesterday, missing on revenue, but raising its full year guidance. And here to break down that report is Grindr CEO George Arison. George, it is great to see you. So let's talk about this quarter, George. So you did report first quarter revenue. Looks like it missed expectations there, though you raised your forecast for full year revenue growth, it looks like, and adjusted EBITDA margins. So what are you seeing in the business, George? And what gave you the confidence to raise those financial targets?
Yeah, thanks for having me. We had a really awesome quarter in Q1. Results were really strong. we grew 25%. EBITDA was over 43%. So really happy with how the quarter went. We don't guide on a quarter-by-quarter basis. We only guide for the full year because I don't think you should be managing a business by quarter, but rather for the long term. And we had been testing a bunch of things in Q1 that were meant to help us drive revenue this year. And some of those results came in pretty strong. So that helped us raise guidance up by 2 percentage points. And additionally, we recently started to release our new product called Right Now to a lot more people. We launched it to about 50 new cities in March and are adding more over the next few weeks and starting to monetize that product a little bit more than we had expected. We had initially planned to monetize it in 2026, but we're going to start doing that in 2025. So that also helped with the raise in guidance.
And George, investors have a lot of questions about the consumer right now, their health, their resilience. George, you have an interesting line of sight there. How does the consumer look to you?
Yeah, I get asked this question all the time, and I don't have a good answer because we actually have not really experienced any negative impact from any economic challenges with our users at all. Now, there are some differences with our users. They come to Grindr for fun, joyful experiences, not for economic issues or for politics. And even if things are bad, they still need that outlay of doing something fun and enjoyable. And so from that perspective, I think we're pretty protected. And then secondly, generally speaking, gay and bi men, which is like the overwhelming majority of Grindr users, are more protected, I think, even in a bad economic environment. They generally have high disposable income, probably more savings, more graduate degrees, et cetera. So I think even if the economy goes badly, they'll be generally protected. So we have no view into anything negative right now. Things are going really well with our user base.
That's interesting, George. I was going to ask you, who is the Grindr demo in terms, George, of broadly age and income, and whether that has sort of evolved over time, George?
It certainly has evolved. Vast majority of Grindr users are gay and bi men. I think if you were to go to Grindr in 2009 or 2010, when it first launched, and when I was using it a lot more because I was not a married dad at that point, we had a lot more just gay men versus today we have a lot more bi men as well. I think that's one of the biggest shifts over the last decade is people being much more comfortable saying that they're bi. And so a higher percentage of our users are saying that they're bi. But we still are fundamentally a product for gay and bi men. That's what we target, and that's what we know really well. From the age demographics, Grindr has been very successful at getting younger people post them turning 18, because we are an 18 and only app, to come into Grindr and become users. That's probably because when you first come out and go to college or finish college, being around older gay men is something you want as well, because you kind of learn what it's like to be gay from them. And so I think that's partly allows us to kind of bring in the 18 plus cohort as they become of age into the app. And then secondly, we are a community. Like that's probably the biggest place to find other people like you in the world for any single gay individual. And so being part of that community is really critical for a lot of people. And I think that helps us with younger users as well. We probably do have some opportunity in being able to keep our users longer in the app as they get older, right? So as they kind of reach that 35 or 48-year-old cohort, we probably don't get as much engagement from them as we would want, partly because we don't do as good of a job in dating features versus more immediacy features. And so one of the big things we're working through now, and that's probably more for 2026 versus 2025 in terms of when it comes into market, is features that will help our users with finding their long-term partners. One of the things we're learning about our demographic is that a lot more of the people in our cohort want to be in a monogamous relationship for the long term versus used to be the case 10 or 20 years ago. And so we need to help them find their partners as they seek them.
And George, let's talk about what's new at Grindr too. Talk about Woodwork, which I guess, George, is this new telehealth service. Walk me through it.
Yeah. So Woodwork is a completely new thing that we launched. It's we are building what we call the gayborhood in your pocket, where we can offer a lot of the things that happen in a gayborhood to everybody on their phones. And this is our first gayborhood expansion opportunity that kind of takes us out of the core dating and social connections set of products that we've offered before into something new. We are starting out with an ED medication that you can buy from us in partnership with a partner called OpenLoop. And so far, it's only available in 2 locations. We very much think of Woodwork as a startup inside Grindr. So think of something that's like 0 to 1. It's an angel round funded company at this point. And so we are not really going to be giving a lot of updates on Woodwork in the immediate term while the business kind of learns what it should do and how to do it best, because we do want to give them the time to do that. But I think it's a huge opportunity. 30% of users on Grindr have used ED medications. 60% have told us that they've considered them. And so from that point of view, offering ED medications and later on other additional products that are kind of tangential to that is a huge opportunity for us. And obviously, our whole concept is we use Grindr, the app, as a primary distribution engine for the Woodwork brand, and that would drive CAC significantly down because we wouldn't be spending all this money on advertising. And then it's also a product built by gay people for gay people. So if you go to woodwork.com, you'll see that the branding is very different than everybody else, and that's also I think something our users would very much appreciate.
George, it is always good to see you and to have you on the show. Thank you for joining us.
Thank you very much. Really appreciate it.
Time now for To Watch in earnings next week. We're going to be getting another big batch of reports throughout the week. That includes Walmart, CoreWeave, and Take-Two. Starting off here with Walmart. Walmart announcing results for the first quarter on Thursday. Analysts expecting Walmart same-store sales to rise in Q1, driven by value-seeking consumers and a strong Easter season. But sales of general merchandise may grow slower due to cautious spending and tariff worries. Taking a look at CoreWeave, the AI cloud computing company, reporting on Wednesday. It will be the first time posting earnings since becoming a public company back in March. Analysts focusing on CoreWeave's near-term spending plans and demand for its AI infrastructure. Investors will also be listening for any commentary about how the company plans to grow beyond its heavy reliance on revenue from Microsoft. And finally, video game publisher Take-Two reporting fourth quarter earnings on Thursday. Investors keeping a close watch on any commentary for its flagship video game franchise, Grand Theft Auto. Company releasing a new trailer for the much anticipated GTA 6 earlier this week, which was bittersweet for fans, we know. That game facing another delay and not expected to come out until at least May 2026. Well, that is a wrap on today's Ask for a Trend. Be sure to come back Monday at 4:30 p.m. Eastern for all the latest market moving stories affecting your wallet. Have a great night.